a mixed bag if you look at Hero MotoCorp's Q2 FY21 performance. Why that is? Because revenue and PAT both have come in line with the ET now expectations. However, you have the margins performance, which was a tad bit disappointing. Let me read you through the Q2 performance and the key parameters and the figures that they've delivered for each of them. Revenue has come in at 9,367 crores versus 7,570 crores, an uptick of close to 24% on a year-on-year basis. PAT has come in at 953.5 crores versus close to 875 crores, up 9%. EBITDA is up almost 17%. It's come in at 1,286.5 crores versus 1,101 crore rupees. So while all of these parameters have seen a good growth, on the margins front, there's been a bit of a compression. From 14.5% in the same quarter last year, this time around they've delivered a margin of 13.7% actually. Why I'm calling it a bit disappointing is because we did expect operating leverage benefits to kick in this quarter, which could have perhaps been able to partly offset the impact of high commodities and the preference for commuter vehicles, entry-level bikes, which typically don't yield very high margins. But that has not happened. 13.7% is the margins that they've handed in for the quarter gone by. As far as management commentary goes, they've not talked in detail about why the margins have seen a compression. They've just highlighted the fact that on a sequential basis, it's a phenomenal improvement. And yes, that is a phenomenal improvement given the unprecedented and unusual circumstances that the company and the entire industry saw in Q1 of FY21 owing to COVID-led lockdown. Management has said that Q2 earnings signal gradual revival from the adverse impact of the COVID pandemic, the recovery in demand to pre-COVID levels, credible resumption of supply chain across the world, cost management and price hike. These are the key triggers and the key tailwinds which have aided the Q2 performance. They're headed for a recovery on the back of government initiatives as well, especially the ones which are directed towards rural and semi-urban regions, because that's where the market is essentially for a Hero MotoCorp, and that's where they enjoy a very strong penetration and a very high market share as well. They expect this momentum in demand to continue going into the festive season as well. They've registered significant gains in market share as well in Q2 across products, across geographies. In fact, they've seen a 300 basis points market share gain in the quarter gone by, which is quite significant, especially when you talk about already somebody who is a market leader like Hero MotoCorp. They expect to maintain the lead through their well-positioned portfolio going forward as well. So largely, if you look at the earnings, they reflect a good performance based on improving economy, strong product lineup, combined with rationalization of expenses and extensive cash preservation measures. But what really one does feel a bit disappointed about is the margins. Let's see what the management has to say about this. The analyst call is tomorrow in the morning. We have to wait and watch to know more about the management's outlook going forward.